Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. Here we would be analyzing what happened in the market during the last week and try to learn something from it and plan for a better trade for the next day. So this is analysis for the week that is starting from tomorrow, April 24th, 2023. So lots of learnings. If you are not subscribed, please subscribe right away and share to your friends as well. Let's get into the charts. Here we have the weekly charts of Nifty and the Banknifty. Left side is Nifty. Yes, clear bearish engulfing pattern. It's a pullback after 3 weeks of straight up. Right side Banknifty, you can see it's a bearish candle again and a clear bull trap. Trap the bulls who are trying to go long. It's much needed pullback actually, because we had a continuous rally, especially on the Nifty. But we are still at a support. We can see that we are at a support zone. There is a change in polarity bounce. It's possible from here. Let's see the daily charts. So this is exactly what happened last week, entire week. After a small retracement, it's not either ready to move up, nor is it ready to go down. So it was just kind of consolidating or moving, doing range bound moves in the last 3 days. Both indices, you can see that. And this again shows that there is a change in polarity bounce, where the previous resistance from where it broke out could actually support in the bounce from here is possible. Bollinger Bands. There's something interesting here. One is in Bollinger Band, the other one is in Wicks. So Bollinger Bands, in spite of this pullback that has happened and Nifty consolidating, the daily Bollinger Bands is not contracting. It's still in the expansion mode. Probably indicating that the upmove is not done with. We're going to continue with that. Same with bank close. We are doing a consolidation last week, but look at the bands on the upside. It's still expanding and showing bullishness. And it's having a bullish bias, regardless to say both. This is a weekly view. So this line, this trend line, is where the previous breakout happened, and we have comfortably closed above that previous week, but this week we pulled back, but still that breakout trend line is still intact. Same with Banknifty. This blue line is a support from where it had made the previous breakout, which was breached earlier, and then we managed to climb back with a solid green candle. A small pullback, trapping the bulls after that. That's a weekly view. Look at the support resistance levels, make note of this from this chart. The first resistance upside could be the 16,650 zones, where it's a 23 retracement there of the previous swing pullback. Then there is 17,863. It could be a resistance upside. 79.34 after that, 18,000 rounding number, 18,070 previous swing low, and then 18,142, 18,200, 18,262, and above that you could call it a rally. And then we're just trying to come out of the retracement. Downside supports could be 7,600 is a major support right now, and if that's reached 17,569, then 17,446, flashy 38 level. 7,300, 7,200, 7,125, 7,100, 7,800. That's how it goes on the outside. Banknifty similarly at a support at 42,000 above right now. If that's breached, then you have 41,600 nearby. If that's breached, you have 41,100 and 41,000 rounding number. 4,800 would be after that. Then 4,500. Similarly, upside, first resistance would be to take out, to keep the 42,000 intact. 42,230, 42,330, 42,600, and 43,100. So these are all these swing highs and swing lows. It can be resistance support zones. Looking at the momentum and the trend, what do you see here? The momentum in the medium term is what you see on the left side, and on the daily charts is what you see on the right side. Weekly charts are showing that the trend crossover has happened on both indices to the bullish zones, DMI positive zones, ADX trend we are talking about. The momentum is still sideways. Still not climbed in the bullish zones. If you look at the daily charts, the momentum is bullish in the bank Nifty, but Nifty had slipped that into the sideways. Right? Just slipped, small slip. It was in the bullish zones, but just small slip because of the retracement. That's where, yeah. Right? This will give you a clear picture in a moment. Moving on. VIX. This is another interesting factor. India VIX has actually dropped, which normally happens when the market is riding up, but it was 1% pullback that happened in Nifty. In spite of that, VIX has fallen to 11.6 lower regime. So whenever it is a low, it can fall further. It is breaching that major low support zone. You can see that it can go up to 10, 15.5 kind of levels if it's falling further. But remember that VIX is a mean reverting nature. Whenever it falls down, there is a high chance that it can bounce up, ferociously upside. So I have to be cautious on that. But long is good for index traders on the premiums. But you have to be cautious, and so it's law VIX regime, and there is some contradiction. This could probably indicate that the fall that happened last week was not really a fall, it was a temporary thing. In the next week, it could bounce up from here. Right. And moving ahead, look at the open interest data. It was a contradiction there between the indices. It's a long build up on the bank Nifty last week. Last build up that has happened not last week. Friday's build up on the open interest on futures. It shows that bank Nifty is long unwinding, which is bearish in nature. So if you look at the PCRs, for the April 27, the monthly expiry is coming. So the last and the first expiry of this financial year, first monthly expiry, that's coming on April 27, Thursday. And we have the PCRs which are closer to bullishness, but not really bullish yet. 0.82 in the Nifty and 0.74 in the bank Nifty is what it shows. So bank Nifty is having futures built up that is bearish, and bullishness on the put call ratio, so it's kind of not really bullish yet, but more towards the bullish bias, you can see, right, from the option side. So the future side, it's mixed bag. So one thing you can notice is the Nifty, the option writer has no clue where the price is going to swing. 17,000 is where the highest put writing is there. 70,700 is where the highest put call writing is seen. So writers are seeing such wide swings to happen despite the fact that we have the VIX that is only at less than 12 in the launch. So why is option writers confused? Right? Second level of higher support is at 17,700. Where the highest put and call writing is in second level. Right? The first level, so market participants expected it could trace back 600 points down and then move. Not much, so it's but put call ratio is 0.82, which is more towards bullish. So it's not giving any clear indication set. The monthly expense are very all time normally. But these are things to keep in mind. Bank Nifty, it's 42,500. That's why the levels. So the highest put in 42 and 42,500 is where the highest put in call writing is seen. Very narrow range. 41,500 and the 42,000 is where the highest put in call writing. After that, the second level of highest is seen at. Right? So not much of clues because it speaks back, and monthly expansion is normally like not clearly defined. It can be big plus moves can happen on the monthly expansion either side. You never know exactly what but overall you can see there is a bias towards the bullishness for the put call ratio, right, which is low. So keep on. So this is what you can understand. So we cannot make out. So we can. So there's a lot of call additions that has happened. If you see this down here, both indices huge call. So there may not be big up moves that may happen. Right. It can either be a big down move or it could be holding on to support. So that's what option writers are seeing it that way. So yeah, so that's all. Whatever is given by the charts is all that we can derive. We cannot derive anything beyond that. But otherwise, right? So we'll summarize at the end. We'll get a clear picture there. Now, looking at how the different industry sectors performed last week, it was mostly downtrending week. You can say this. With the IT sector did got the biggest block. That's 5.4% down. Metal more than 0.5% down. Autos kind of flat. Pharma is The only sector that probably, yeah, for my reference, the only sector that was up by 0.5% and 1% each in reality was also down. Not too much, but yeah, because drag or is IT sector is confirmed. Others are all not doing much of down or up moves, right? Now, who maintains bullish view right now is FMCG. It's bullish in both time frames and long trade can continue here. Now, other sectors like realty, pharma, auto are all bullish on the short term still, right? And metal and IT is only ones that is not bullish. It is bearish completely on both time frames, higher and lower. Metal is still sideways on the lower time frame, and so auto, pharma, FMCG, realty. So four of these major sectors are maintaining the bullishness on the long term, on the short term. Right? And so FMCG most bullish, auto, pharma, FMCG, realty maintaining short term bullishness. Stay out of metal and the IT analysts. It shows some improvement. IT completely stay away is what the data is showing and the charts are showing. You'll understand that if you see each of the sectors information is given here in the chartical form. IT sector you see here top, it had a big jump off from the parallel channel and it has triggered support and formed a hammer. Metal is also struggling to move up. You can see that inverted hammer, but mainly to the sideways at least. But IT has certainly lost the momentum and jumped into the medium to bearishness zones of momentum also. Auto is intact bullish on the short term, but struggling to move up on the medium term. It's actually basically consolidating in a range. Pharma coming back and then trying to get up into the bullish zones, but short term it's bullish. Momentum is up, and FMCG is clearly bullish. Reality is at that, it's still the sideways basically. Another study is the industry heavyweights, how they contributed to the index last week. Right? You see, the major contributor is HDFC Bank, which had a big hit after a few points away from the all-time high. Right? It was thought that this would be a breakout that could happen from the flag and pole. Didn't work out. But interestingly, the momentum was taken a support at the RSI 60, and this could turn out to be a range shift momentum on the bullish zones and then bounce up from here after this pullback, right? But the candle that you see here is a bull trap clearly, huge bearish white range candle. HDFC also is a bull trap. It also has got a range shift momentum possibility on the positive side, right? So bullish, but a pullback week more than expected last week. After it almost gave a breakout. That's what happened with HDFC Twins. Now Reliance has been consolidating. It bounced up from the hidden neckline of the support zone and facing heat and then remaining sideways. Crossover in the bullish zones is not happening in the trend. Now these two sectors, the Infosys and the TCS, is where it got badly hit. Infosys especially. It is a jump down, big 6% kind of down move. It didn't hit the circuit level as well, right? Remember, these are all the quality stocks. At the same time, highest contributors to the index. That's why we are not able to move down. So TCS is showing some comeback in the hammer, but bother on the side. But TCS in the sideways. But momentum of the Infosys is gone to the bearish zones. Stay away from that. ICICI Bank has hit the resistance in the momentum and the price. It had made a decent correction and then trying to pull back, but it's the first major. No, not the first. Yeah, it's the first major in the last several weeks, for 6 to 7 weeks. It's a bull trap, and then but otherwise, I say short term bullish. Medium term, it is facing the resistance and breakout because it's very close to the all-time high levels. Kodak Bank has been consolidating like almost climbed the bullish zone. So medium time, that's the only one that has got that apart from the HDFC that's bullish. It is having better momentum than the ICICI Bank for that matter. And so IT stocks in index heavyweights giving them more trouble. HDFC's retrace after almost a breakout. Lines consolidating. ICICI Bank also is kind of facing resistance. Tech doing okay. That's a summary of how the industry is doing okay. I said in the sense that it's having bullish momentum almost. The medium term or the long term, right? So after having analyzed that, let's move on to see how the institutions did the thing last week. Like, so they've turned the other side. Affairs were net buyers last week. This week we have some net buyers as net sellers of 4,640 crores in the cash market. Domestic institutions were buying 3,000 crore, but it didn't help to hold the market up. That long the rate is on the downside. That's what you're seeing. So the affairs had been selling for long, but they turned out to be buyers for a week consistently, and then gave it up and then back to the selling of 2,000 crores nearby per day the last trading day. So institutional participation into selling mode is trouble, more trouble, big trouble. That's something you have to keep in mind. And on the end, let's try to understand how the currencies and the global markets and global commodities that influence the markets are playing out. First, in the currencies, the dollar index is having a downward retracement, but it's close kind of flat with small up move 0.15 and 1.72. So, it's having a bearish falling momentum. But look at the currency pair USD INR, which is slightly up 0.25 again and climbed to 82 above levels. And it could be resisting at the all-time zones. It could be resisting there about the 83.5, but it's just now ready to cool down and go down. So rupee is still weak, one of the weakest levels. Still remain weak. That's the thing. In spite of the fact that the dollar has been cooling off since several weeks, the currency pair is still having a depreciating rupee. Crude oil is 5.7% down and once again falling below the 78 levels and 77.87, and certainly if momentum is sideways on that. Gold also is down 1% and it's obviously hit the resistance zone. This is crude. That was good pullback after having done a range shift and the climb to sideways and it was heading high. Even before it hit the top of the wedge, we have a pullback. For an oil importing country like ours, it's okay, it's fine. Gold is attempting to break out and then serious resistance out there and it's pulling back. But still having a bullish moment, very much bullish. Look at this, very much bullish moment there. Next will be the global markets. We are analyzing the Dow Jones, Nasdaq, and the S&P 500, the three major indices. Dow Jones being just like Nifty. Tech index is what Nasdaq, and S&P 500 is a broader index with final stocks. All of them are having sideways momentum, as you can see. Last week was a struggle. It's in the top of a descending wedge. It's trying to break out of that. All of them had slightly red, not much, but it's a very crucial resistance zone. That's it. 0.25 down, 0.37 down, 0.87 down, and Dow Jones, S&P, Nasdaq, respectively. Right. So sideways is what it is. Facing resistance. That's what it is. Just to summarize, yes, markets are down, right? But it's a crucial resistance zone, trying to break out. Gold is down. It's a crucial zone, facing resistance, trying to break out. Crude dipped midway in the top of a parallel channel where it was trying to move up. Dollar kind of flat, otherwise in a bearish momentum, but rupee is not appreciated yet. That's a summary of how the commodities in the global markets. Two action numbers for the next week. One is for the Naveen Fluorine International. So the volumes above moving average. Momentum is showing a breakout. Trend is made across our and then rising up. Definite solid wide range bullish candle. And the parallel channel has a lot of space on the upside, giving good risk reward. This is a swing trade for a few days, which could extend to 1 or 2 weeks max. That's all. Stop loss has to be tight below the entry candles low. And extend trail till the top. Second is gold range consumer. The only sector FMCG is bullish. The only bullish sector. Industrial sector, major industrial sector. It's having an inverted hammer breakout that probably is happening. It also is at bypass the neckline of the rounding pattern and could be breaking out with rising momentum, rising trend, bullish, and also in a parallel channel, a lot of space out there. So that could be the range you have to look out on the target with tight stop losses, few candles away. Right? Could be giving good risk reward. Godrej Consumer Products and Naveen Flooring International. Both are long trades. Now here is another one, Nifty strategy where you're having a double diagonal counter spread where you're selling here near months put and calls just like a triangle and taking hedge positions for the 4 month. It is giving a very good range and a very good probability of profit. The range is what matters. Right? And if it is breaching the range, you'll have to roll in on roll out on either side depending on what the price is. Opposite side is moving. So this is for one lot. Capacity has to be based on what is your capacity. Position sizing has to be based on that. You can take multiple lots based on that. But for one lot, this is what you get. Don't keep it till the end of the expiry. Come out of it 1 to 2% profit depending on what's comfortable. Right? But you can make consistently like this every week. That's the beauty of these strategies. And also the Batman also is that's completely hedged. You know what exactly maximum you lose. Right? You still have the capital left for playing another even if it goes wrong. And it's very less likely to go because probably is profit is more and the range is also wide. So yeah, very rarely does it go out where you need to do adjustments, and most of the time you will be earning small but consistently. That's a weekly Nifty option strategy. Well, just to wrap up on all of that, we had been talking about all this. Let's just summarize it. What happened last week was a retracement. Where is it now? It is not trying to go down. It is taken a support and consolidating there. This happened after in the middle of a rally, a small black in the middle of a rally, and the rally is of extending to 6 to 9% after a pullback of 12 to 14% of retracement correction that happened previous to that. We have two troubles engulfing in a bull trap. Bearish weekly candles, it's causing trouble. Momentum has taken a dip, but momentum trend volume demands, wicks, open interest, put call ratios, support price levels, all of this still indicating that still in favor of the bulls, and then therefore the B for the next week is smiling bullish. Also, the VIX is low. US indices are also attempting to break out rather than also facing the heat. It's actually attempting to break out of that, right? So it may do that. So that way, if you look at overall, it's mild bullish for the next week. If I was a seller, it's a trouble. US indices facing the heat is also a concern. Weekly bearish candlesticks is a concern. A dip in the momentum and the trend is a concern, right? They're all concerns, but despite that, the chart is saying it's more towards the bullish side, right? Major resistances exist definitely at 17,800 to 18,300. That's on. IT sector is not supporting is a concern. Inflation, economic data for India does seems to be inflation easing, and that's why the VIX fear is seen. But still, the global cues, industrial fuels, and COVID, all these things are still there uncertainties, which could suddenly have a spike in the VIX and then throw you out of the game. So I'd be cautious. And crude oil is easing, but rupee is not strengthening is a concern. So for the next week, basically 17,500 to 7,900 on the Nifty, and the 41,500 to 42,000 is what we may build. We may look out for it because it's a monthly expiry, so it can be highly volatile. And for the medium term, the levels are very, very down below 16,650, 750, there is 6,800 and 18,300 and 43,000 on the upside. Right, that's for the medium term we talk. So only if these two levels are breached, we have some rally on the downside or upside, and then we may still be just consolidating on the medium term, right? So watch out for these levels of 7,500, 14,500 on the downside, and 7,900, 42,500 on the Nifty and the Bank in the next week alone, if you see, right? Basically, just to summarize, it's mild bearish. Market is in support zone. Right? It's not ready to break down yet. It is in an ongoing rally. It is a small pullback that has happened, which is fine, which is needed, which is expected. Now, good move for the up is what the previous. It may go wrong. The market could surprise you, but then you have the stop losses and you have the risk-defined strategies for you. That's what, and your position sizing them that will protect you. Right? So all the best. So if you're not subscribed, and then if you learned something from it, and if you like it, please hit subscribe, comment, and then share it to others. We have very few subscriptions. Appreciate the help in this a lot. And also Telegram services, if you want, you can check out the description and then avail that as well. Happy trading, happy learning, happy investing next week. Bye bye.